Hi everyone, this is Dale Pinkert with ForexStopHunters.com. I'd like to make people aware that this is very high risk. Only risk capital should be used in highly speculative investments. Futures, options, other derivatives, and past performance is not indicative of future results. You're looking at the daily gold chart. I just want to do a follow-up with everyone because I wrote about this, that gold may not rule in 2011. Well, we're only into the second trading day of 2011, and it looks like the king is his rule is failing. He's falling from grace, from his throne. I talked about the parabolic nature of the advance from 2000, that you can see how the rally continues to extend and had become parabolic. And as you can see, I talked about previous historical examples of parabolic advances, which included the NASDAQ in 2000, residential real estate here in the U.S. in 2006. And even though I don't believe this will be the final high in gold, we got to a stage that it had increased sevenfold. There was not one economic fundamental that was negative. Everything could be spun bullish in gold. You couldn't think of one fundamental reason why it would ever go down. A weak dollar made it go up because of dollar depreciation. A strong dollar made it go up because there were fears in the Eurozone. Strong economic growth globally fueled increased demand. Recessions and deflation and systemic risks used by QE2 to avoid was bullish for gold. So there was nothing out there that could be bearish for gold. The one fundamental that I came up with is gravity. And as you can see, gravity has taken hold. This was a very ugly day. We're down $40 on the day. Silver down 120. So what was a forecast is manifesting on your screen. I talked about in a piece I wrote 1160 as a target. My shorter term target's about $117 down from here. That would be the 1260 level, and that's based upon a previous high here that we posted last spring, early summer. Looks like the move is in progress, and that we're now entering a shakeout period in this favored asset class. And in fact, there's red across the screen. Other bubbles that I talked about were crude and S&Ps. S&Ps are beginning to sell off here today. They were the most resistant to the sell-off. What led the way today was definitely gold and silver, precious metals. I talked about copper. Copper selling off. I talked about the Aussie dollar breaking down out of a rising wedge, which happened last night in the European session. This is a pretty good initial sell-off. Some of the risk aversion currencies are coming to life. The long side of US dollar yen, the long side of US dollar CAD, after a successful stop hunt that we talked about, clearing out the most stubborn bulls under 99.29. We're now trading par 23, so we're already 100 points above the stop outs on the weekly. The stop hunt that was successful at 99.24, there were stop hunts under the daily that people that thought they got out good under the 99.70, they're looking at this market 50 above their stop out. And again, vultures stop out, clean out the longs, then turn. That's what we're seeing happen there. So this is Dale Pinkert. Again, want to leave you with an image of what happens after a parabolic advance in the gold market. I would say that this somewhat would compare in real life to getting in a wheelbarrow, walking up to the edge of Niagara Falls, and going over the falls. I would call this a waterfall decline. Thanks for your time and your attention. Dale Pinker with ForexStopHunters.com, signing out.